Hey, good day, everybody. It's Dennis Wilborn. It is time for On the Radar with the Active Trend Trader. I'm going to bring you 4 different points today. In today's session, really quickly, we'll be going over the indexes. We'll also be talking about how to wait for momentum shifts for higher probability trade entries. The market is oversold, but it has also been switched into incorrection. The NASDAQ is it's even closer than spitting distance from being in a bear market. We'll take a look at that. And then lastly, how do you find strong stocks, or what do the strong stocks look like when the market's in a big correction like it is now? So with no further ado, let's jump into today's session right now. So let's get started with the S&P. And as you can see, S&P is coming back down and looking like it's going to retest the lows it set back on the 24th of January. It was really darn close to hitting those levels. We basically broke out the bottom. This was a very classic move, a very classic. We fell down. We rallied attempt, and actually the first test of the rally actually held, bounced up, then not enough momentum to shift us back up through it, and then we fell back down and are retesting down at the lows that were made in January. So what is that? Hold on just a second. Move this up. There we go. So what does that mean to us? Then there's the bell. And yep, the indexes were closed pretty darn close to the lows of the day. And one of the first tips that we want to talk about was, what do we want to look at for a potential reversal area? One, you got to define a location where you could get the bounce. But secondly, the big thing to wait for is this. On these longer term charts, take a look at the momentum indicators. And I show 3 of them here. The TSI, the market forecast, which is only available on the Thinkorswim platform. And I threw in the regular just MACD with a histogram because it reflects kind of a combination of the two. And as you can see, on every one of those, what's going on? Momentum is heading down, heading down. And I realize the week isn't over yet. However, when we started the week, the momentum was heading down. Looks like we may be, we still have a couple of days left in this week. The daily momentum has also shifted down on all these indicators. The MACD is shifted down to the downside again. So, excuse me, if we break this low right there where the green line is, how much further could we potentially go? And there's a couple of different ways that we can look at that. And a couple of ways we can look at that is I measured from this low high to this low. Now this was a 31% drop. Right now we have hit the dollar figure amount for the drop, but where would a 30% drop take us to? That would be absolutely percentage-wise symmetric with this move down. And a 30% drop would take us down to, let's go ahead and grab this. And I'll just start dropping this down until we get to approximately 30%, which is right about there, 31, 32%. So 32% right there. I find that, really interesting. Is that took us right down to this level here, which is the 1272 extension. And so that would mean we would overshoot by 100% and go down 1272. Look to your left. What does that show us? That's right where we found support and also broke out of before. And so those levels tend to have reverse polarity. What once was support turns into or what once was resistance turns into support. And so that may be where we find support. Keep an eye on the Fibonacci's because each one of these major Fibonacci's lines, that's the the 61% retracement, the 78% retracement, the 100, 1272. Each one of those could be a magnet level for price actions to reverse and head back up to the upside. So then the first thing I'm looking at is, for a higher probability trade, I want to see the long-term momentum shift to the upside. Is it approaching an area where it should shift in the near future? Yes. However, again, this week is not done, and we'll have to take another snapshot on Friday. The NASDAQ undercut the low that was made on the 24th of January and is continuing to fall lower. That puts us in for a couple of different levels. 316 is one of the levels that we want to be keeping an eye on. So we'll put an alert there at 316, and also this past low that it broke out of here, which again was a retest of a breakout previously. And what's the dollar figure on that? $297. $297. Everything looks in gear to the downside. If I were to look for a particular trade, again, if we project down from this, let's go ahead and take a, let me grab just project from this high to this low here to give us an idea of where we may be going. Give us a really good target area here. And I'm going to measure from, say, from here to there. There we go. The 1272 is right there at 314. The 161 is right there at the 290. And as you can see, there is a level right there, 296. So somewhere in those ballparks, look for price actions to basically stall going down and reverse up. What am I looking for? I'm looking for three different things. I'm looking for my momentum on the weekly chart to shift back up to the upside. Does it have to cross? No, but I need to see that it has definitely stopped going down. Looks like I'm going to get a three-line cluster on the market forecast, which is a very positive sign because typically within 1 to 4 trading periods, this is weeks, 1 to 4 trading periods after we get the three-line cluster, we tend to get a reversal signal. Take note that reversal signal can be from in this case, lower down in price. Price action could get down to one of these other levels. And I'll look for, hey, am I going to get down to one of these other levels? Look to your left and just say, did we find support / resistance there before? And sure enough, right there at the 315 level, we did. And we're just a hop, skip, and jump away from that right now. What about, as we said, where did we close today? As you can see, well, how far did we are at 19.48% to the downside. Bear markets start at 20%. So the Qs, like I said, is closer than spitting distance away from a bear market. And I'll cover one of the trades that we did do for our active trend trading AutoPilot ETF members is when this was falling, we actually jumped into a trade on SQQQ. And where did we jump on it? We jumped on it right here at a $39 level. And in 4 days, we actually took off our second third of this position today at 22.5%. 22.5%. If you want to find out more about trading the AutoPilot trade system, up in this corner over here, up in this corner of your screen, there will be a little eye that'll tell you how you can take the AutoPilot trading service for a test flight for about 3 months, see how it fits your trading styles, and benefit from, one, being in the market when you should be in the market, and being out of the market when it's doing the crazy stuff that it's doing right now. So IWM also, excuse me just a second. Okay, IWM had actually hit into bear territory earlier in the year. And I think we are back in it as of right now. Yeah, we're down 21%. So the Russell is back in bear territory. Projections to the downside. If price actions break out of this low right here, where is it likely to go? There's a couple of projections. One is this level here at the $67 range. You can also lay in a, just let's really quickly lay in a fib, see where it's likely to go. There we go. The 100% line would be right there. So that would be down at 131. I mean, it's hard to imagine the Russell fall or the IWM falling that far, but it does have some good support there, about the 154, and also just below the 1272 at 172, that level right there. Now, when I find these things, I expand them to the right a little bit more. So let's go ahead and drop this out several more months, because this is still a valid level of resistance. As you can see, so we take out this low here. We're probably going to shoot on down temporarily to one of these additional Fibonacci lines to the downside. So let's see, let me get back over here. So the market is oversold. What do I check for when we may get a bounce? Because if we continue to sell off going into, there's a lot of headwind going on with the market, with the Ukrainian thing, with the inflation thing going on, a lot of, oil and gas, there's just a lot of junk out there that unfortunately we're having to face currently, because the ineptness of the current things that are going on in Washington, D.C., and we see that basically we may continue to push down further. And so what do I look at for a modification? Well, a couple of things I look at is I look at the VIX. What is the VIX telling us? The VIX is telling us that, one, it is pushing higher. However, in the past, over the last, going back to November of 2020, every time it would get up into the area of about 38, again, this is a ratio kind of index. These aren't, they do equate at $2, but it's not, anyway, you can trade it as just like a regular index ETF. So when the price get up to about 37.75, 38, it would tend to reverse down. I encourage you, go take a look at the week of, the last one happened in the 24th, and you know what happened on the 24th. That was the first rally day. That from the Investor Business Daily, that was the first rally day. The one before that was 11/29. I think that was just slightly after Thanksgiving. Also turned into a nice little tradable rally. It was a tradable rally. However, we may press on up a little bit higher. This was the COVID bear, as you can see how high and so just pay attention to what's going on with the VIX. This is the volatility index on the S&P. And so correction. The other thing I take a look at that I want to be aware of, and I showed this to you before, but the other thing I keep an eye on is the percentage of stocks above their 20-day moving average on the NYSE. When it drops below 30, oftentimes shortly after that, there is a reversal. I like to have it when it's down here, down to 15, 20, 10, 15, or 20, because you tend to get a harder reversal back up to the upside. When did we get these signals here? Well, look at that, January 24th. See the rhyme and reason starting to come together. So when this is low and the VIX is high, they can oftentimes be a precursor or predictive that price action should turn around. Now, the thing that it doesn't tell us is how much of a rally you're going to get. How much of a rally are you going to get? So what about strongest stocks in a weak market? One of the things in finding them is you have to know what they look like. One of the stocks that we've been trading here over the past half of the year is Tech, T-E-C-K. Again, this is a selection off of our AutoPilot top 5 selection group that we put out every week to our premium members. And on this particular stock, we traded it back here from about 26.65 all the way up to these past highs. Exited, got out with some good profits, and then it came back to the breakout area. We entered at, I want to say, where did we enter this at? We entered it at, okay, I entered Tech at $30.25, which was bouncing off of, you put in that hammer, and we actually bought it down in the support zone there, and then it took off from there. We've taken off 2 different positions on this so far, made 11% and 22% on those 2 positions, leaving us a little bit less than a third of a position left. And this is one of the things, one of my rules that I apply is in order for me to hold a stock through earnings, Tech has earnings tomorrow morning before the market opens, is I have to be up at least 10%. And so being up 22% or 20%, approximately 20% currently qualified for that. And plus the thing about it is I had, I already had profits that we had put aside, and we also had profits. So we have been very, very successful with this stock. One of the things I would like to do with this is oftentimes these stocks that, keep running up 20%, 20%, 20%, they can turn into some of your largest winners for the year. And so not just the year, they can go on and be a winner for multiple years. And so we want to look for ways to get fully invested and just let that winner run. Let that winner run. And that reminds, let that winner run. So what does it look like? What's the difference? And as you see, I'm going to bounce up here. I'm going to go back up to the Qs. Way below all the moving averages, looking like it's falling apart because it is. Go back to Tech. Tech, above all the moving averages. The moving averages stacked to the upside. Very bullish looking chart. Now, again, ask me tomorrow morning after the open, and we'll see if it still looks bullish or not. But I have a lot of leeway in here to basically, even if I stop out with my trailing stop at about 34.50, I'll be looking to get back into this if I get a bounce off of the 34 or the 50. So that's one. Another one that we have been trading a lot on is CMC. CMC. Charlie Mike. There we go. Again, in a nice little gradual uptrend, pulling back into support. We may get a little bit further drop to the 34 here, but we'll just watch this. We actually got back into this, bouncing off of the 50 there today. We'll see if it will rebound and take off. If it doesn't, we will get out of that very quickly. But we've taken some great profits on this. We rode it from this area here up to here. Got out, still had a third of a position left as it pulled back, filled back up on the position down here about 33, 32. And I think we also then bounce off of the 20-day moving average it was respecting, got some more shares there. Trying to build us into a full position to let the winner run. So that basically covers the 2 stocks that we're interested in, how to tell the difference between when the market's showing weakness and what a stock that is strong looks like. The other one I want to take a look at is one of the perennial favorites, of course, is Tesla. What's Tesla telling us right now? Excuse me just a second. So what's Tesla's telling us right this moment in time? Well, basically it's telling us that it's breaking back down and may break further down. It is in a classic downtrend. Lower highs, lower lows, and pushing back down towards support. So if we lay in a Fibonacci, here's what's very interesting. We've got this breakout area that we see here at 386. But if we take this move from here up to here, which is one fell swoop from here up to this high, where is the projected downside with where's the projected downside with Tesla? Well, the projected downside, there's a couple of them. One is a complete 100% retracement would take us down to 456. And you're saying, well, you know, is that going to get it down there? It has in the past. Let's just say the next one that is kind of of interest to me is this one down here at 384. And this would be the 1272 extension to the downside, which would be at 357. The last one is down at 116. Now, I had done a previous projection off a head and shoulders pattern that it put in last year, which it has basically voided that pattern, but it was putting me down at about 177. So could Tesla fall that much? Again, I don't know. But the thing that is really interesting, if it did a complete retracement, it was to put Tesla, well, nah, it's not good. I don't think it's going to go into negative numbers. And so we'll just leave that one off the table. So that's one of the ways to determine where things may be going. Another one is on a shorter term basis, just take the fib here. And we can either go from this high to this low, or from this high to this low. No, from this low to this high, project back up to this high. And so it would look something like this. This, there, back to those highs. And that would give us this purple line here would be the symmetric projection down. And as you can see, that would put us at right in line with this past support area of 626. And I would be more prone to look at these targets than that longer term target. So I hope that gave you some ideas to be trading going into next week. And if you do have any questions, hey, join us on Friday for the Trade Your Way to Wealth webinar. We do that free every Friday. So have a great rest of your day. And again, leave me some comments there in the YouTube channel comment section. And if you want me to take a look at a specific stock when we do these on the radars, or take a look at a particular thing like a particular oscillator or that type of stuff, or you want more information about the oscillators that I use personally, ask that question. You'll see at the end of this video that I will also show you a link down in the description that will link for what bear market bottoms look like. There's 2 tutorial videos that you should take a look at. I think you'll really enjoy them, and also they'll get you ready for when the next market bounce will be. So until next week. Oh, last thing. Next time, I'll be talking about how to take profit and still let your winners run. So that'll be a part of our topics that we'll talk about next Wednesday on the Radar. Aloha. God bless everybody.